Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's Wednesday, January 10th here. We got one little item to touch on the economic calendar, and that is the wholesale inventories for the month of November. So you can see here in October it dropped 0.4%, but November it went up 0.8%. So you can kind of see how the wholesale side of things are, that they're increasing their inventories. Let's go ahead and jump over to the headline news. Currently, stock market is down. It's taking a little bit of a pause, but it's keeping its eyes on a couple things that popped up of late. And the most recently is this bit that came out, Bloomberg report on China. China is believed to be again, they don't know the reasons behind it, but there's a report that they might be cutting back on their purchases of our debt, like our bonds and treasuries and such. They currently own about 19% of the outstanding debt that's out there. And again, they don't know if it's just them rebalancing. If it's not, if it's just rebalancing, it may not be a big deal. But if it's something that they might be trying to take a stand for trade negotiations, that could create some other issues. So the stock market, and then might have to review on their GDP and the economy, how the economy is going to be going. So those are different factors they're going to be looking at, and until they know the why behind the possibility of them cutting back on their purchases. Also on the news is that Japan central bank, they decided to go ahead and cut their purchases of the bond buying program. As you see, a lot of countries are now kind of taking the initiative that they've had loose policies for so long that now they're going to maybe cut back, and you're going to start seeing that from many other countries around the world as well, especially Japan, where they've had much longer stagnation, or maybe not stagnation, but their economy hasn't been doing as well as one would hope. So let's see how this is the bond market. This isn't quite as bad as it looks. I mean, it looks pretty drastic here, but this long red, basically, if you factor about half of it is what they call a bond rollover. So, which we get once a month, where we basically, it's a reset of the bond prices. So they're resetting these coming in, and we almost have to take it for a grain of salt. It doesn't affect our pricing. So about 12, I think it was 12 basis points. If you factor about 12 basis points, that's where we should be. And but so far this morning we're down about 20 basis points, and that's obviously enough for a price worsening. So basically, interest rates are a little bit higher today compared to where we left off yesterday. And you can see this is a pretty steep decline here that we're seeing here, and this sometimes happens. We get these swift, when it changes very quickly. But over the long term, we expect the rates to go up, but not at a dramatic start like this. So it'll be more gradual, where we'll have ebbs and flows, where it goes up and down, where it gradually kind of increasing as the year goes on as effect. But a lot of this is being played, part of it is being played with the China, but mostly, of course, the economy's doing great. So everything's looking positive for economy. Let's go ahead and take a look here at the 10-year Treasury. As you can see here, 10-year Treasury has a bit more room to go, which may be needed to see if we could get a reversal in our mortgage-backed securities in the route they're going. So this is kind of at the expense of mortgage-backed securities. So if we get all this room here and it continues this climb trajectory upwards, it's going to take money from the mortgage-backed securities, and therefore interest rates will continue to rise. But if we could find some type of hold here, if this ceiling holds here, if we even reach that high, it would it might keep us from worsening, continue our rates rising further. So hopefully we'll see a little bit of a point here, and then maybe a little bit of reversal, and bring the interest rates back down a little bit further. All right, hopefully that makes a little bit of sense here. But today rates are a little bit higher. That pretty much concludes it for the day. Hope you guys have a great rest of your day, and look forward to see you guys tomorrow. But if you guys want to get more data, just come over to Twitter here. My handle is at Mike Bjork on Twitter. You can find me there. And if you guys want to get more updates throughout the day, even after the broadcast here. Have a great day again. Thanks for watching. See you guys tomorrow. Bye.